lot of news last week, particularly on the economic front in the US. I guess gives us pause to reason what's actually going to happen in terms of valuations for equities. We're obviously short and feeling a little bit of pain. Trump pushes for higher tariffs against the EU at 15 to 20% higher. Inflationary, that's what we think. University of Michigan's July survey showed rising consumer confidence. Core inflation ticks up 2.9% from a 4-year low. And one-year inflation expectations drop, which is quite interesting, I think. Core PPI in the States up 0.2%, consolidating obviously the last couple of months' trends. Netflix drops 5.1%. Don't know what's happening there, but a bit of a cause for concern because they beat revenue and earnings forecasts, which was quite interesting. China's GDP 5.2%, slightly lower than forecast. And we have another economic package, which is supporting copper prices and the general industrial production there in China. In Australia, the unemployment rate surprisingly climbed to 4.3%. That caused our markets to come under a little bit of pressure. Okay, so quite a few things there happening in the market. I think this week we're going to basically just talk a little bit about the US economy, economic data. Now, we have spent a lot of time talking about tariffs, talking about the effect they're having on the economy, but what is the current state of play in the US? We're going to take a deeper dive and have a look at what's happening, the core inflation, industrial production and retail sales. Core inflation showed a slight uptick. March, April and May numbers were all below, around that 2.8%. We just marginally moved up to 2.9, but when you look at all the other bits and pieces, you can see that this, if it becomes more of a trend, it is a concern for the Fed. It could just be an apparition, just a 1 month off. But somehow I'm starting to think that perhaps that won't be the case, particularly when we've got these tariffs coming in, which we know will be inflationary. The expectations for the market was a lot higher. It was around about 3%. So I think just coming in below that sort of suggests that Fed's still doing the right thing. And we're still within that area of whether or not we will get that interest rate adjustment. Remember, the market is going for 2 towards the end of the year. We actually feel 1, maybe even none. Anyway, let's see what happens. Okay, I guess the important thing there on the CPI, on the inflation, the shelter index, which is a major component of the core CPI, increased by 3.8% year on year. Now that's slightly easing, but once again, we're contributing to a higher or an uptick in inflation, and to me, that is a little bit of a concern. I do think our expectations and the University of Michigan survey, 1-year survey out for inflation actually came down. Not quite sure how that actually would work, but given that the year ahead anticipation is for price pressures to ease, then that's not a bad thing. And it's also probably justifiable, in terms of the further outlook for valuations for equities, where we will probably get a lowering of rates given where we're at the moment. But we feel not the case, and we feel equities are overvalued. Okay. Industrial production year on year. I guess adding to that slight increase in inflation, last month's real industrial production in the US rose by 0.7%. That matched an upwardly revised number in May. So that's actually not positive. Steady, modest growth industrial sector. And I think to me that does justify some of these valuations. I think once again, where monetary policy is, if the market is actually absorbing the cost of money, which is higher than a lot of the other economies, global economies, then that does actually tell you something about where the market is at in terms of production. PPI numbers also relatively the same, if not just slightly off as well. So indicating that's supportive, and also indicating that the Fed doesn't really need to move much on interest rates, because if they do lower rates certainly by that 0.5% or quarter on a quarter, then that does suggest that you've got an economy that is actually doing the right thing. So why would you need to adjust? But anyway, let's see what the Fed does on that. I think we need a little bit more time there, particularly when we feel that the effects of the tariffs will have to start to filter through, which they obviously will, particularly when we've known Mr. Trump sort of trying for a lot higher tariffs, 10 to 15% in euro, and we haven't got another deals. Retail sales, on the other side of that, retail sales rose by 3.9% year on year in June, accelerating from the 3.3 recorded in May. That's not a bad number. Once again, it reiterates the fact that the economy is holding well with monetary policy where it is. So why would you want to increase it? And I think that's where we start to get that thing. Now, in terms of valuations, with the equity markets, when you do see this, the expectations are that the economy is weathering things well. So if you actually lower rates, that sort of gives it a shot in the arm, which it doesn't need. So that's why we start to think that we might not get those rate reductions in the market. But the other thing is that if the expectations and market perception, if we don't get it, might sort of see a reversal in itself. So I think that to me is quite important. So when overall, I think you'll find, particularly on interest rates, I would actually like to think that we won't get as many cuts as what the market anticipates, and that's why I think we'll see that little bit of a change there. In terms of expectations, that might put a little bit of a head top in the market for equities. Let's see what happens. Now, this week we've also got US earnings seasons that moves into full gear. We've got Alphabet, Tesla, Verizon, Coca-Cola, IBM, a whole lot of, they've got their quarterly reports coming out. And I think that'll be obviously something to watch. Netflix, we saw them beating expectations, but the market wanted more. Let's see how that unfolds.